Another person who loves to get straight down to business is our finance guru, Effie Zahos. Effie, great to see you again for 2020.
Hey, Effie.
Good morning, good morning.
Effie, we've seen an unbelievable rise in the median house price in both Sydney and Melbourne in the past quarter. What can you tell us about the Sydney rise?
Yeah, there was a lot of doomsdays, wasn't there, last year saying the property is going to crash, and this is all just, shut our mouth on that. Sydney and Melbourne have exceeded all expectations. What we're seeing now is Sydney prices year on year have increased by a massive $73,000. And in units, a 3% rise saw that increase by $21,000 year on year. So it has surprised a lot of people.
And is Melbourne following that trend as well? Have they seen those rises?
Yeah, Shelley, Melbourne certainly has. Year on year, property prices have jumped up by about $71,000. They had a huge rush at the end of the last quarter by as much as $45,000 rising there. Now, the unit area is what's really interesting. The medium house price in unit now is just over around $500,000 odd dollars. It costs more to buy a unit in Melbourne than it does, say, Adelaide or Hobart, a home. They've had an exceptional run. Now, most of that is mostly on higher end properties, and it's a bit sporadic as to where it's happening, but the needle is pointing upwards.
Effie, certainly interesting to see what's happening in Sydney and Melbourne, but modest growth elsewhere as well. We note that Brisbane, Adelaide, Canberra and Hobart all touching record highs without those huge price rises that we've seen lately. So do you think this is a national story as well?
Look, properties like any other asset classes, you're going to have some eggs that are going really well, some not, and so on. Then you've got your regionals, your inner cities. But what's happening in here is that I think consumer sentiment, we've had 3 rate cuts last year. We know rates are going to be low for a while. That's built in some confidence. And what we're expecting is that most analysts are saying, yeah, Sydney and Melbourne have not reached their peaks yet, very close. But what will happen is more stock, as more people want to sell their house comes onto the market, it may quieten down a little bit more. But regardless, it's expensive to buy.
Effie, it feels, I'm sure, for first home buyers like the finish line is getting further away while they're running the race. It's really difficult for them. I mean, what do you think all this means for first home buyers?
Oh, look, this is my pet peeve. You have to chase your tail as a first-home buyer. Let me give you this example using the domain data that's come out. Let's say this time last year you wanted to buy an apartment, you had $500,000 you were looking at, you had a 10% deposit, you got $50,000 in your bank account. You want to buy in Melbourne, say in North East. So your decision last year would have been, hey, do I jump in and just pay 10% deposit and pay lender's mortgage insurance? That's to the lender, it doesn't protect you. It costs $9,000 in that example. Or should I wait and save up that extra $50,000 so I avoid that cost? Well, the domain data shows in that particular area, property prices jumped up over 19%. It would have meant you would have had to save, in addition to the other $50,000, an extra $20,000. It's a really basic example, guys, and I'm not factoring in the fact that maybe if property prices fall, that goes against you. But it just shows how hard it is for first-home buyers.
Yeah, that really is tricky, isn't it? As you say, always just scraping for that particular deposit. But you hope that once you do get in, the capital gains, if you sell out later on, are obviously going to give you a little bit back in return and you make some money along the way.
Well, it's better than living with mum and dad. I did that for a while, let me tell you. I'd rather be out than in, I can tell you.
100%.